Hi, I'm Daniela Cambone, and welcome back to StansberryInvestor.com. My guest today says that get ready for a new banking crisis, but it's not like one that you may have in mind. Please welcome back to the show, David Morgan of the Morgan Report. David, good to see you. Thanks for joining us from your car.
Well, I am parked safe and sound, but pretty
Yes,
busy schedule, and we wanted to get this out to the public. So thank you.
exactly. You were gracious enough to accept it. I said, we got to get you on. You said, I'm in my car. I'm like, I'll take it. And yes, for the folks back at home, David is safe, not driving. All right, let's talk business here. You've been very vocal lately about a banking crisis. Now, David, we know you as the silver guru. You don't really, talk outside of, silver a lot, but when you do, we have to pay attention here. I certainly did when you said that we are going to see another banking crisis, but this time it involves bail-ins. Tell us about it.
Yeah, well, basically, I do look at the big picture. I consider myself to have a macroeconomic view, and then silver is just a subset. But regardless, the bail-ins really bother me because after the last bailout, there's legislation passed in the Senate and House that it's illegal to do bailouts, which means bail-ins. And that's kind of gnawed at me for some time, Daniela. So I started looking at the very basics, the fundamentals. And one of the main fundamentals is what is money. And of course, there's theories about money. It's commodity money, which, most of your viewers are most familiar with, gold and silver, ancient times, voted by the people. And then there's legal money, which is money's anything that we say it is, or money's anything that the government edicts or fiats. That's money. And then there's others. But the one that really hasn't got much recognition is the ownership theory of money. And the ownership theory of money resonates with almost everybody that's seen you in Stansberry, which means if you can't touch it, you don't own it. Very common sense, very logical. But we've never really applied that to the fiat system. So I started thinking about it more and more, and I really kind of had, I wouldn't say an epiphany, but something that really provoked me to ask Greg if we could explore this. And of course, it obviously resonated with you somewhat, because the idea that you have money in the bank, everyone takes for granted, but they don't read the fine print to realize they're an unsecured creditor. I'm talking about the United States now, an unsecured creditor to the bank. And it's really the bank's money, believe it or not. And what that means in a banking crisis, and let's say that there is a bail-in, then they have the right legally to take what you consider to be your money. So there's two thoughts on this. Number one is the ownership theory of money is you take out physical currency from your bank account, and you could do it in any way that's best for you. In other words, you don't have to withdraw your entire bank account in cash, but I would certainly consider owning some cash for a lot of various reasons, electronic failure, cyber attack, bank closure, terrorist act, who knows? I look more toward electrical problems with the grid, perhaps, or cyber attack is the main two that concern me. And the other part is that I didn't really say to Greg, and that's, if you have a large sum in the bank and you're really just getting acquainted with the precious metals, one of the easiest ways to move money, quote unquote money, is to move it via a check or a wire and take X amount from your account and move it into physical metal. And that's what a lot of savvy people have done over the years that have listened to you on Stansberry. It's like, look, I need some protection. I need some what we call monetary insurance, some wealth protection. And I've got a lot of cash, but I don't have any metals. So that's one way to do it. The other part, again, I'll give it back to you, Daniela, is does it make sense to take some cash out of the bank? And the answer is absolutely after the fact. I mean, once people wake up to the idea that, uh-oh, and just one more comment, it's kind of funny, but it isn't. And that's when we had the 2008 crisis. Guess who was running down to the ATMs? The Wall Streeters. Not the man on the street. The Wall Streeters knew what the heck was going on, scared to death, and worried about an ultimate collapse. And they were draining the ATMs at the time. So back to you.
Yeah, I have a lot of questions because I've known you for a very long time. and you're not one to just come out with warnings. So the fact that you had this epiphany is what really resonated with me or concerned me. And when you mentioned Greg, that was your conversation with Greg of USA Watchdog. So it did resonate with me, and I want to dig a little deeper here. So, um, how much currency do you think is sitting in the banking system that can be tapped?
Probably about 1% of what the cover ratio is. In other words, the math shows about 5%. Half of that or more, 60% is overseas. So that drops you to about 2.5%. But of that 2.5%, I cut it in half again because half of the currency, the physical, you could touch it and own it, money, we'll call it, is in grocery stores, casinos, liquor stores, places of business that do cash business. So it's not in the bank. It's scattered out all over the United States in various businesses. So how much is actually in the bank when you, owning a bank account, go in there and say, hey, I've got 10,000 in this bank, I want it in cash. The chances of you getting it might be good. The next person, okay, and the third person, they're out of cash. I'm being a bit facetious, but you get the idea. It's a very, very small cover ratio.
I've been doing this for a very long time. I don't think I've ever seen a trend like this year where I have so many experts coming on, more and more people coming on telling me they're getting completely out of the banking system. So how, what's your exposure now, David, if you don't mind sharing? I know you mentioned you should have cash at home to make sure you can pay rent and whatever your basic expenses, but are you completely out of the system now?
I'm not, I have to have an account, the business account to pay,
Right.
people that work with me. So not completely out, but no, I think there's really two methods here that most people are familiar with. One is the traditional privately held money, gold and silver. And the other, of course, it's been at the forefront for some time now, and that's the crypto world. So between the crypto world and gold and silver, there are a lot of people that have opted out. I mean, I don't know Michael Saylor personally, but obviously a smart guy and the guy that is pretty much on the Bitcoin baptized system, which is a way to take large sums of money outside of the system and secure it. And more people again are waking up. I'm not as favorable to the crypto world as some. I'm more favorable to the traditional method of physical metal, but nonetheless, I think you could be overexposed. And I don't want to scare anybody. I did an update for my paid members last night, Danielle. I'll just share a little bit of it. This is an educated guess. If a bail-in is to occur, I think it would go along the lines of everything that's guaranteed by the FDIC, Federal Deposit Insurance Corporation, will be left alone. And for U.S. people, that is $250,000. So that's a fairly good sum of money. It's a pretty tidy sum. Most Americans don't have that sum, and some have more than that. So the bail-in would likely go anything above 250,000 gets bailed in, and anything below that isn't touched. So that's my take on it. David said it. Does that make it true? No. That's my idea about it. But I want to keep people calm. I don't want people to think they've got, $12,827 in the bank, and during the bail-in, it's all going to blow away. It won't. I'm 99% sure it won't. But for those that got to me in March, I'm going back to the start of the illness, Daniela, if I could digress just for a moment to make a very important point. A lot of people called me in March 2020, a lot for this caliber person. David, I've got $1 million in the bank. David, I've got $2 million in the bank. David, I've got $4 million in the bank. I have never bought gold. I'm very concerned. How do I do it? I'm brand new. I don't want to make a mistake. Can you help me out? Never had that quantity of people in that position during 1 month period in my life call me up and say, I'm really concerned about how much money I have in the bank. I want to do something about it. Can you help me?
I can second that. I've been getting a lot more calls about that too. People new to the precious metals and don't know how to start or buy. And I'm not an advisor like you are, David, but hopefully I can help point people in the right direction. That said, when you say it's not that your money will just disappear, I guess when you're talking about a bail-in, what I imagined when I first heard about your reservations is that you just won't have access to your cash. Is it frozen in this scenario for you?
I think that's the most likely scenario. I do that based on historical precedents. If you go to Argentina, for example, Daniela, what you find is that the accounts were there. You didn't lose a dime, but your access to it was limited. So for an example, you had $1 million in the bank, but you're only able to withdraw 300 per week. So, wow, what if your expenses are 5,000 a month and you're only able to get 1,200 a month? What happens then? So this is the kind of things that really concern me.
So let's take it one step further here. With all the talk about central bank digital currencies, and we've been talking about it a lot here on StansberryInvestor.com, does it eliminate that risk? Is that why central banks are moving in that direction?
You could make that argument. The other side of that coin is, do you accept peer-to-peer? In other words, someone is owed currency. They're not familiar with Bitcoin or Ethereum or whatever, and the person's willing to make good on their debt in a cryptocurrency, but the receiving party doesn't really know how to accept or whatever, which isn't that hard. I mean, you can get a wallet, someone can talk them through it, and they can accept it. But in a contract basis, there has to be agreement on both parties. And I can see a situation, I'm just taking the negative side of it right now, could be difficult in some instances. But that is a way, out. I mean, there's a big fight going on. I mean, it's pretty clear that the DeFi, the decentralized finance block, is getting they're really having an issue because of the central banks coming in with their cohorts in the regulatory bodies and say, we got to regulate these things. And they're seeing more and more regulation. Plus, just one step further, to give me feedback, it's what's a security and what isn't. And, I'm pretty well versed in the legal aspects, not a lawyer, but I've been in the field and I study pretty hard, that a lot of these things you can make the argument are securities, which puts it under a whole different jurisdiction or a different body of governance than most people are aware of.
Let me ask you this, David. Comparing it to 08, what you envision, again, this is David's theories, David's thoughts. What's the straw that breaks the camel's back here?
Well, it's the amount of currency that people are aware of. It's a psychological phenomenon more than a math issue. But with the reverse repo being in like the $1 trillion range, having to suck money in and out of the system every night, the amount that the government of the United States and others that are following that are inflating at an unbelievably unprecedented rate, and still the U.S. still remaining pretty much the strongest currency and the most trusted. It's when the trust and confidence in that breaks, and it's breaking as we speak, is when you're going to see these problems. And one of the solutions that is at law is a bail-in. Whether or not it will take place or not, I do not know. What I do know is it's my duty, my moral obligation to warn people how I see it, and whether they agree with me or not, that's their choice.
And I had a very in-depth conversation with George Gammon recently about reverse repo. So if the folks out there are interested, I urge everyone to check out that interview. My second to last question for you, David. Why are you more concerned now than 2 years ago? Is it because of the liquidity that's in the system now that's way more than 2 years ago? Or why the epiphany now?
Feedback, paying attention to what's called sentiment. It's the amount of people that have awakened to the truth that you can't print yourself wealthy, to the fact that there's something drastically wrong with the financial system. It's broken, and it has no real relationship to the physical economy. So the economy is what we do to eat, to live, to build, to grow, all those things that are physically tangible to the human experience. The financial markets are supposed to reflect the actual economy, and it does not. You keep seeing a stronger and stronger number in the stock market, but that would indicate if they were correlated to one of the best economic situations ever. And it's not. We have people that are hungry. We have people that are unemployed. We have people that have lost their businesses. We have people that are struggling. We have people looking for a second job to put food on the table. So there is absolutely no correlation. This upsets me greatly. And so again, it's my duty. I mean, I feel like I've been called to the business I'm in, and I get to say that. That's how I feel about it very strongly, and that it's important. And to thank you for asking me to come on and give this message out. Again, I'm the messenger. The message is pretty clear. Something's drastically wrong, and what do you want to do about it? And I'm just giving you that message. It's up to you to, accept it, deny it, or think about it.
Really well said. Last point. On your point about owning gold and silver, it's not just for a bail-in situation, but you've been writing a lot about how there's probably the best protection in these inflationary times. If you could just talk a little bit about that.
I think one of the main things that have been lost among especially the precious metals people is what the function of gold especially is and what it's done. The subset of the Morgan report is to build and preserve wealth. Gold has preserved wealth. From 2000 to present day, gold has had a compounded annual rate of growth of 10% per year. So it has maintained wealth. How can I say that with authority? If you go to shadowstats.com and you look at the true inflation rate, it's been about 9% a year. So gold's function to preserve your wealth, not make you wealthy, but to preserve your wealth, has been stellar over a 20-year period. But most gold bugs, and maybe I'm guilty of it, have been waiting for the big explosion. When's gold going to 10,000? And it probably will, because there's going to be an overreaction to the demise of the current financial system. So gold will react or maybe overreact. But as far as has it done its job, it has. Silver hasn't been too bad either. On the same metrics, a compounded annual rate of return of silver is about 9%, which matches the inflation rate. Now, silver is more volatile, and it's also a smaller market. So in the event that we get this explosion in gold, we'll see silver really explode in my studied view, because there's so many people that at the last minute will buy it no matter what the paper price is, because they feel that the currency is going to fail. And so if it's 50 or 60 or 70 or $100 silver, they're very willing to pay that, because they're worried that we're going the way of Zimbabwe and the currency is going to have no value. I don't think that's going to happen. I think that the idea of it happening will take hold to some of the populace that will take action. And I think before it's worth zero, we'll see a reenactment of another financial system. And I think it'll be, right now, the best guess would be the SDR, because that's what's coming to the fore right now. Special drawing rights are going to be, pervasive here pretty soon. And if that step doesn't work, then you could see a central bank digital currency.
It looks like it's coming sooner than later, and I'm happy. Well, on the note about silver, you saw what people were willing to pay on premiums earlier this year.
Yeah, that's a foretell of what the silver market's really capable of. I mean, I don't like to see people pay high premiums, but the market's the market, and if you've got to pay a high premium to get silver, people are willing to do it.
And I'm happy you mentioned that about gold, because just yesterday I was, debating with someone on Twitter. I got a lot of emails like you do, David, saying, I'm so disillusioned. I'm expecting more from gold. And my answer, was really, well, what were your expectations? What were you expecting gold to do, and what has it not done? And like you said, it's not at that 5,000 or 2,000 price yet as we speak. But like you said, it has done its job.
Done its job.
David Morgan of the Morgan Report, thank you so much for joining me from your car. I appreciate it. Thank you so much.
No, my pleasure, Daniel.
Sense of urgency here, folks. And thanks so much for watching. We'll have much more for you on stansberryinvestor.com. In the meantime, don't forget to register free at danielacambone.com for premier content and special reports you can't get anywhere else. Thank you for watching. I'm Daniela Cambone.